Welcome to Strato Income. We're here to help you make money through the stock market and other investment vehicles. So today, let's talk about some of the trades that I made today in the option market as well as stock ETFs. And then I'm going to talk a little bit about the UPS trade that I made before, how you can score a couple hundred percentage returns. And then we're going to share a little secret about how to use the last trade column to get you the best deal when you try to make a trade in an option chain. And then last but not least, we'll finish up by looking at some of the earnings, that have been reported at the end of the market day today. And potentially there might be opportunities where you can get in and ride, with the earning momentums. So right off the bat, the trade that I made today, as you can see, there are a couple of trades that I'm trying to fulfill and then end up being canceling. But let's start with the trade that I fulfilled first. So first of all, I bought two puts for Disney before the earnings. So as many of you guys know, Disney was going to report earnings after the market closed. And the expectation is that, the fact a lot of the theme parks and the movie business where Disney rely on in terms of, the money makers, they have been pretty much impacted by the COVID-19. So coming into the earnings, I was hoping, there could be a little bit of surprise. So I bought two of the puts for Disney at the price, for the strike price of $105, and I paid about $29 each. So let's look at the option chain for Disney. The rationale behind it, it's really before the earnings. So I played a weekly call. Usually when you play weekly call, you can get it cheaper. So weekly calls are calls or puts that are expiring by the end of the week. In this case, it's Friday, August 7th. So I come into the earnings last minute and I decided to buy two of the puts at 105. The rationale behind it is that if Disney ended up surprising everybody in a pretty negative way, tomorrow the option premium price will increase from $29 to maybe $40, $50, at which time I can actually cash out and take the profit by selling back the puts that I purchased before. So look, from the report earnings, it sounds like it's actually quite the opposite. There's a lot of surprise, pleasant surprise from the Disney Plus subscription, and the fact that they're going to launch some of the movie business first on Disney Plus is a really strong potential to acquire even more customers. So after our Disney price had surged, and from 117 when it first closed, now it's to 123. So tomorrow that might be an opportunity to play some of the calls for Disney. But you never know. This is extended hours, so we'll see how it goes. In the meantime, for myself, I have a couple of Disney calls that are going to expire in October 16th. I played a long time ago, a couple of weeks ago, and I paid about $42 each for the price of $170. So tomorrow those costs might potentially come back live. So we'll monitor those for sure. Coming back, the next trade I made is Fastly. I made a Fastly earlier last week. The fact that Fastly is a really strong stock that has benefited significantly from the COVID and all those kind of cloud computing business. So they're reporting earnings this week. I think if I'm not mistaken, tomorrow. So the premium on those are very expensive. You can see it's about 290 implied volatility, which means that the premium on each of the calls and the puts is very overpriced. So last week, the fact that there's a high premium, last week I decided to sell some of the out of the money put spreads, to really try to take advantage of the high implied volatilities and sell, at a high price. And today, the stock has really, the last couple of days, the stock has really, climbed up. Let's look at the daily chart. I think I did that last week around this price, and now, the last couple of days, it has been a huge earnings run up. The earnings run up, usually what it means is it happens before the earnings. People have high anticipation that the company is going to report a good result, so they buy it before the earnings starts. Very likely, if everything goes on well, the stock will very likely stay flat towards the end of the week. But if there's a very huge surprise, either in the good way or bad way, it will surge again or drop significantly. So we'll see on the Fastly report earnings reports. But it's too late for me to chase the stock at this point. So I sold a couple Fastly spread, and then today I decided to close it. I think when I sold it, I took the premium about $190, and today I sold it back. So in a couple of days, I was able to just ride it away and then pocket about $160. So these are, again, it's one of my favorite strategies, which a lot of you guys probably want to be should look into as well, to really take advantage of selling premiums. Again, I have to emphasize, continuously here, selling premium is one of the consistent ways you can make money in the option market. Most of the calls and puts that you purchase, about 70 to 75%, I don't know the stats on the top of my head, but most of those calls and puts that you purchase will end up being worthless, and you're just basically throwing money into the water. So with that being said, let's look at the next trade I did. I did a next trade for the UPS. Some of you guys, if you guys don't know, I had cashed out a couple UPS calls last Friday. So I made a video. If you haven't got a chance to watch that video from last Friday, where I talked about 500% of returns on the UPS calls. And today I decided to cash out the latest one. So the UPS call that I sold it today and I closed it, the price was $620. I bought it at $29, and then the fact that UPS reported earnings and it's very good and the stock kept going up. Now that particular call is in the money, and the price premium for that went from $29 to $620. So I decided to cash it out at the last minute. So I sold all my UPS positions. It's a very good return of my initial investment. And the UPS is still showing very strong momentum even today. So I decided to place two more UPS call out of the money at the price of about $21, expiring August 21st. So we'll see if it can actually keep going up in the next couple of days. So that's one of the things that I mentioned earlier about lottery tickets. These are lottery tickets. It's out of the money. It's cheap, but once you hit it, you will get a huge returns. So those are a couple of the calls in the post that I made today. And then let's talk about one of the things that I wanted to share with you in terms of how you can score the best deal. As you can see from my option chain, I tried it a couple of times on my Fastly. I tried to close it with price, from $20, $25, $20, $25, trying to go back and forth. And eventually I was able to sell, and the market came down a little bit. So I ended up selling the Fastly and closed it at $30. So you see, the reason I wanted to try a different price is so that I can trying to close the trade as cheap as possible. If I were able to close the trade at $20 instead of $30, I would have pocket $10 more for my trade. The way you can do that is by looking at chains. So if you can see my options in chains, I have a couple of different parameters on the top: delta, implied volatility, volume, open interest. And then one of the things I want to call your attention is this column here, last price. As you know, there's bid and ask price for any of the option calls and the puts, but the last price is the last transaction price that actually somebody contract is being fulfilled. So it gives you a very good indication of where the market is. If you ended up placing, for example, this trade right here, right, you see the price is ranging from $15 to $17, but you look at this trade here, you can actually see people are making the trade at $17. So what does that mean? Even though the range on this is 15 to 17, but the 17 is, it's fulfillable, meaning somebody else would actually take it. So by doing nothing, just simply look at the, follow up with the last price, you were able to pocket a couple more premiums on for your option contract. So this is a little trick that I want to share with everyone. Again, you can enable it by click the layout button on the top. So you can customize it. You can search the last price, and then it will give you both the size and the price. Then you can add it to your own, option chains. So that way you can always find the best deal in any of the trades that you're interested in. So I hope this is helpful. And that's the reason I tried to change a different price and trying to close it. And you can see I also trying to did that for my UPS. I was trying to sell at 640. It didn't get a chance. It was not able to be fulfilled. So I ended up, selling back at $620. So here's some of the things that you should always be, mindful. Because really, if you just simply take another one more second, you could be able to get more money out of your initial investment. So those are all the trades that I made today. Let's look at the things that I want to share with you guys tomorrow. Mainly those are Disney and Square. So Disney, as I mentioned earlier, Disney actually really surprised everyone. People were expecting that Disney is going to be the main, victim from the COVID-19. But the fact that they were able to launch Disney Plus in such a, fast fashion and acquired a lot of the customers, I think they're 4 years, ahead of schedule in terms of the number of the subscribers. So that's a really positive news. And the fact that they have a lot of IP content, again, it's just, proven that the Disney Plus, it's such timely investment for the company. But you never know. This is extended hour tomorrow. It could come back down. But with this current rate and the last couple earnings that we all look at, the Apple, Microsoft, or the Facebook, it's very likely it's going to keep going up. So I'll monitor for sure tomorrow if there's any opportunity to buy some of the out of money calls for Disney. Even though I have the Disney long-term call for October 16th, there might be potential opportunity where you can capture some of the cheaper ones that are expiring this week. For example, if you're buying the 126, which is not too far away at the price of $50, very likely it will double or quadruple by the end of the week. Again, this is under the assumption of Disney will keep going up in the next couple of days. And I have to emphasize, none of this is actual recommendation. It's just education purpose. Trading option, you can potentially lose everything. So trade at your own discretion. Last but not least, let's look at Square. Square also surprised everyone. They have a huge reports, very good positive reports, and the stock went from 135 to 153. That's another stock that I might be looking into tomorrow morning for the weekly earnings momentum play. So the FASB call, the Square call, even at the 165, it's $70. So you never know. It's a very cheap, very good deal. But again, I have to emphasize, even though it's buying at $70, you can see, people are actually paying $60. So that's $3 right there for savings. You don't have to pay $70. You can just pay $60 to get whatever you want. So with that being said, today is Tuesday, April 4th, and then here are all the things I want to share with you guys. Thank you for your time, and I hope this is helpful and inspirational. Tomorrow I'll see you again. Let's see how the Disney and the Square trades will, come into my